Good afternoon and welcome to the Mutual Fund Show right here on Bloomberg Quint. I'm Nirav, your weekly appointment with me. Well, maybe 3 or 4 minutes over than usual time, excuse us for that. But we are trying to go contra, if you will. And that's the theme for this show as well, right? We hear a lot of times about contrarian investing. Should you invest in a contrarian theme? What are the risks associated with it? Can you nullify those risks? And therefore, the whole approach of investing in funds which probably adopt a contrarian theme. It's a wide bucket. You could actually even qualify a lot of other funds which can be counted as contra funds. A lot of value-based buying approaches are considered to be contrarian in nature as well. So it's a very wide basket. But we try to stick to pure play theme of contra and try and tell you how you as a mutual fund investor can take advantage of contrarian buying. Let me just quickly show you what's happening when you look at pure play contrarian investing. Now, what we've tried to do is show you performances from a few global contrarian funds which adopt the contrarian theme in its strictest sense. Even the names are contra funds. This is a 10-year change of various countries. Most of the funds are in US, yes. One fund out of India that has made to this list of the top performing funds, source Bloomberg of course, is Invesco India Contra Fund. It's given a return of 270% over the last 10 years. That's not bad, quite frankly. The others, you could argue that Croft Value Fund doesn't have a good return ratio, but some of the others have not done too bad. In fact, a lot of times stocks or people who invest heavily in an individual stock which is contrarian in nature tends to do much better. The returns will be much larger. But then at times people lose out on such themes as well, wherein you invest in a contrarian fashion and the theme doesn't work as per what you thought it will. So what do mutual funds do? What do contra funds do? They try and negate the risk that is associated with such focused approaching and try and give you returns which at times could be as high as 270% over a 10-year frame. Well, the architects of the Invesco India Contra Fund, and one of them is with me today on the show to talk about how you as an investor can benefit out of contrarian investing. Needs no introduction. Tahir Badshah joins us on the Mutual Fund Show. It's his first episode on the Mutual Fund Show. Tahir, it's a pleasure having you. Thanks so much for joining in.
Thank you, my pleasure.
Well, interacted with you a lot of times, Tahir, on the general market mood, but never on such a specific theme. Do you believe in contrarian investing?
So, the thing is that contrarian investing is something which is part and parcel of the market. It is not something which is distanced away. So, for example, we make this distinction all the time between contra and growth-oriented strategies, or the genesis or the fountainhead of many of the growth stories today have actually been in their being contra companies at some stage of their life cycle. And you have a number of examples. So today's hot favorites in the market, which is, let's say, something like Eicher Motors, probably even a Maruti for that matter. At some stage in life, not too far ago in time, about 7-8 years ago, they were actually contra trades. And they were not really very high growth stories at that point in time. People bought them for completely different reasons. So Eicher, as you know, was probably bought by many investors thinking that there's a lot of cash on the balance sheet, which is there for support. And they saw a lot of attraction in the possibility that the Volvo truck business would become fairly meaningful over a period of time. It turned out to be completely different. The growth drivers turned out to be completely different 5 years ahead. But it started off in a contra manner. So was the case with Maruti. It was a completely beaten down stock in around 2012-13 when they were going through that Manesar episode and the fireworks which happened at the Manesar plant and the labor problems. Now that was entirely a contrarian. It was a great company. It had the right ingredients in terms of competitive advantages. But it was completely overlooked by investors. And now it has become a crowded trade. It is a fairly well-known, well-owned stock. It still continues to do well. It is still amongst our portfolio bets. But I'm just saying that its genesis was in a contra theme. And what you then get to earn is essentially the recovery in earnings, if at all, if your stock, the call plays out well, and the potential re-rating as well.
Right.
And that leads you to those kind of mega returns which you probably... So it's not about belief, it's about, that's how the nature of investing is, that you're trying to essentially look at companies. When we talk about multi-baggers, we are talking essentially about companies which are ignored today and probably will become the darlings at a future date, right? So multi-bagger investing in a way has to be necessarily at some level a contra trade to begin with. So I think they are kind of joined at the hip. It is not something which is an asset class which is sitting outside and needs somebody to start investing.
So let's try and distinguish. Almost every fund manager, and please correct me if I'm wrong, at some point of time in all of the schemes would possibly take some contra bets, because you will find value,
Yes.
for example, in an asset class, or or rather in a sector or a stock, and you would probably buy that. What would segregate a pure play contra fund? We don't have too many examples as well, hardly 3 or 4 examples of pure play contra funds which are themed also as contra. What would differentiate a contra fund from other funds?
Well, I think it's ultimately on the kind of portfolio balance that you maintain. So I think the contra philosophy that we followed is not about investing in companies which are loss making, don't have any competitive advantages, and you're hoping that at some stage they will start making profits. That is not the kind of theme that we are pursuing. We are essentially pursuing a theme where we're basically talking about reasonably good moated companies which have competitive advantages, but they're going through a growth cycle. They're going through the rougher part of their growth journey in their life cycle. And therefore they are probably in some kind of operational stress. We don't really want to take a contrarian to the extent that we will take a lot of financial stress onto our portfolio.
Right.
So we will stay out of, our contra is therefore differentiated from the point of view that we'll stay out of financially stressed companies. We will largely focus on companies which are probably going through operational stress, but at one point in time have been the favorites of the market. So I think at some stage, we might find decent amount of contra opportunities today in maybe, let's say, the pharma or the IT space. There have been companies which have done exceedingly well in the past. They have been the darlings of the market. They have grown 30, 40, 50%, but now they are going through a growth pang. And it happens in the life cycle of every industry. Nothing grows to the sky. You will probably have everything which will probably go through some cycle or the other. Some have deeper cycles, some have relatively shallower cycles. So that's the one key difference. The other is that since now the Invesco Contra Fund is a 10-year-old fund, it is something which the evolution has been such that now the fund at any point in time always has a growth plus value combination. So whenever new ideas enter into the portfolio, they arrive as value ideas largely, and or probably if at all, they might be growth at reasonable price. They will stay on in the portfolio till they are growth at reasonable price. And if at all they become growth at unreasonable price, then it exits out of this fund.
Got it.
So what we have today is therefore a fair balance. We have 50% of our stocks which are value-oriented names, and 50% of them are in the growth-oriented names. These 50% growth-oriented were at some stage in the life cycle value companies which have now migrated to being in the other bucket in the portfolio. So this is how the entry and the exits of the new ideas will happen. They will start as value stories. They'll hopefully become growth stories as well. Not all of them will migrate to becoming growth stories, but many of them will. And in the process, you capture the upside of the growth recovery as well as a potential re-rating of these stocks as well.
Right.
So it therefore gives you a good balance. You are not therefore skewed significantly to a value-oriented strategy, which then will crystallize over a 4-5 year time frame. Here you are giving enough time for your value ideas to crystallize, and at that time you have the backbone of some of your growth companies which will keep running for you. This is how our differentiation essentially is today.
Okay, that's a pertinent point. Now, Jayesh Khilnani from our research desk has done some interesting analysis on contra fund investment opportunities that exist and how have they performed from a 3 to 10 year perspective, loosely defined. Hear out and see what Jayesh has to say, give out. Jayesh?
Thank you for that, Niraj. So I did some research on what contra fund options are available in India. And to my surprise, there's only 3 funds available in this category. Let's have a look at some of them and how they have performed and what sectors are they invested into. The first fund on my list is the SBI Contra Fund. In terms of sector allocation, it's highly tilted towards the BFSI segment. Banks constitute nearly 25% of the portfolio, while financials just over 10%. Pharma is at 7%, which is also the worst performing index in this year. In terms of price performance, the 3-year return has been 40%, while the 10-year return has been just about 150%. The second fund on my list is the Birla Sun Life Special Situations Fund. Once again, you can see that in terms of sector allocation, highly tilted towards the BFSI segment. Banks constitute more than 25%, oil and gas at 12%, and financials just over 8%. In terms of price performance, this fund has done relatively better than the SBI Contra fund in the last 3 years at about 63% and 5 years at 180%. But tell you what, the Invesco India Contra Fund is the best performing fund in this category over the last 10 years, and their CIO is here to give us more insights.
Yeah, well, that's whom we have been talking to, Jayesh, Tahir Bacha. Now, Tahir, so we've kind of identified for our viewers, or probably given a basic idea of how the formation of a contra fund would be. It need not necessarily always be contrarian in the strictest of natures. You could still have criteria and therefore invest accordingly. What kind of investors should adopt contrarian investment strategy? I'm probably broadening this question not just to a mutual fund, but maybe to all kinds of investors as well. We'll of course want your advice on what kind of investor should approach a contrarian fund as well. But what kind of investors by and large should adopt contrarian investment opportunities?
Well, I think it's essentially about, so everything requires patience as far as investments go, but I would especially single out contra funds as ones which investors need to live with a little more patience at their level, at their end. This is simply because of the fact that some of these value plays tend to take a little bit of time to crystallize as stories, as what we eventually expect out of those companies. It is also possible that you might buy these value stocks and maybe they might not be necessarily value traps. Your effort is to avoid them.
Sure.
But they may necessarily not immediately start working in your favor in the first 6 months or 12 months that you buy them. So you have to take a slightly incremental approach. In many cases, therefore, if we don't buy all these positions at one go and take it up to that 4-5% level in our portfolios at the day one itself, we start with a nominal position and then we build it up as we see the story panning out in the right direction. So the level of patience which is probably required in this fund structure is probably a little higher, but then the returns at the end of the day come to you with, since it is a fund which is early on in taking risk, it also leads you with that potential return which can come out of it if the story plays out right and if you make your investment horizon reasonably long. So what we typically tell our investors is that if you are looking at a contra strategy, and especially the Invesco India Contra Fund, then at least have a 3-year perspective, if not more. And that is, so you're not necessarily chasing momentum, you're not necessarily chasing the current favorites of the market. You're in fact essentially trying to do exactly the opposite to a large degree. You're trying to avoid the darlings of the market, you're trying to avoid the crowded trades in the market. And it has its own sense of, you need to reconcile in your mind that look, there will be things at some time which will be flying in front of you and your fund may probably not be doing the same thing. But what we've discovered is that if you give this fund a reasonable amount of time, and by which I don't even mean 7 and 10 years, we've generally found that compared to owning a basket of the top 5 performing funds at any point in time as a multi-cap strategy, if you were to probably against that own a contra fund, then over the next 3 years, the cumulative alpha that you would probably make out of your basket of the top 5 performing funds will probably be lesser than what you would make as cumulative alpha out of a contra strategy, for example.
How come they haven't taken off so much? I mean, we don't find too many contra funds in India.
Yeah, I mean, it's surprising. In fact, as you know, there are only 2 contra named funds in the market today. I think it is also in the way the portfolios or those funds have been run earlier. So I think there have been quite a number of these contra strategies which have actually wound up in the interim.
Sure.
A few of them have managed to survive. And I think it is essentially about, like as I mentioned to you, the portfolio structure needs to be such that it doesn't significantly underperform during a time like a market situation like this today, for example. So we have, even in the Invesco India Contra Fund, even on a 1-year basis, while we are not among the top 10 performers in that multi-cap space, but we have got 3-4% alpha over the index, which is fairly healthy if you conceptualize the fact that you've invested in a contra fund. In a contra fund in this kind of a market which has done 20% in the last 1 year, this fund has delivered 23%, which is not bad for the contra theme that it pursues.
Got it.
But this has come as a result of the fact that the fund has maintained a certain balance. And this has been maintained very consistently over the last, so we've talked about it in our presentations time and along. every month that we issue our fact sheets, we maintain this, that 50% in growth, 50% in value, 50% in large cap, 50% in mid cap. If you're going to be disciplined about the way you're going to run it, then I think you will generate different kinds of outcomes.
The 5-year CAGR is not bad though, 22% is
Absolutely.
pretty healthy.
Yeah, and in fact, like I said, 3-year basis, we even figure among the top 10. So that stays. But on shorter horizons, if you're wishing that your fund will always be among the top 10 performers every 6 months, every 9 month, 12 month, 18 month, 24 month time frame, it may or may not happen. But cumulatively, if it is held for at least a period of 3 years, we see that the cumulative outcomes are probably better than owning the top 5 names in that particular space at any point in time. And we've done this analysis on a recurring basis over a 5-6 year time frame, and we find similar outcomes. So there is a merit to this whole process, but it needs to be done in the right manner and in a very disciplined manner.
So let me ask you one final question really from my end. We might have a few questions really coming in from guests, but is this a good time to indeed adopt contrarian strategies? The market is at highs, almost everything barring IT, pharma, etc. might be doing well. Is it a good time to take in a contrarian approach?
So obviously the best time for a contra fund, one can envisage is a situation like this when the markets are doing really well. When I think of it, and especially over the last 8-10 years, if I contrast it with, let's say, the 2008 scenario, that was a time when you had markets, the markets were in a state where every sector was doing well. You had everything from FMCG to real estate to commodities to IT to pharma, which were flying at in 2008. Today, while the markets are at a new high, they're doing well, they're reasonably expensive, etc., etc. There's a lot of investor interest. It's not that all the sectors are performing. There are maybe 3 or 4 sectors which are doing exceedingly well, but there are several others which are not doing well.
Right.
So contra investing is not seasonal. It is not about it being a strategy which you need to adopt in current situation. You will always find in any kind of market situation, barring exceptional years like 2007-8, that there will be some investors who will be significantly focused towards one side of the market, which obviously will lead to a situation where a lot of the other side of the market will get ignored.
Sure.
And where you will probably be able to detect certain contra opportunities. So we would not necessarily want to say that this is a fund which is the most suited in this current environment. Sure. I think it has got something which is a fairly, it is a strategy which is reasonably evergreen during different kinds of market conditions.
Great. Okay, Tahir, so good having you. Thanks much for taking the time out and joining us on the Mutual Fund Show. We look forward to have you more often on this forum as well.
Thank you once again.
Well, that's the architect of, the current architect of the Invesco Contra Fund, and the fund is really doing well over a 3-year, 5-year CAGR. I think the performance has been quite exceptional. The question is whether this can last and what kind of investors should approach such an investing. As you can see and as you saw on the screen, we are now joined by, as is the norm of the show, an advisor, somebody who can tell us what kind of funds should the investment be made into. Should contra funds be the correct investment idea right now? And if not, and if yes, what are the contra funds you can bet on? And if no, what are the funds in general that one can bet on right now? He's been with us before. Nirav Panchmatia joins us right now again on the show. Nirav, good having you. Thanks so much for joining in all the way from Nagpur, I might add. So thanks so much for taking the pain and coming out here.
Pleasure is mine.
What are you advising your top clients to do right now, Nirav? Some contra funds are giving great returns. Is that a space, value / contra to be in, or do you look out for maybe balanced funds or some other funds considering the market is at 10,000?
So Niraj, while contra funds are a good bet at all points of time, but they are a preferred bet, especially when the market is a little bit overvalued. So as we are aware right now, the market is not cheap by any stretch of imagination. In these times, contra fund being a fund which bets on undervalued sector, it controls your risk. It brings it down your risk, but at the same time, it doesn't compromise on the return. So during these times when market is a little bit expensive, contra is a very good bet to have because your downside is protected. Contra fund by definition invest in sectors, asset classes or stocks which are out of favor. That means you're not buying something very expensive. So if there's a market correction, your downside is protected, but if the market goes up, there's a good upside for you to have.
So the advice that we've received, over the past few days or the past few weeks that we've done the MF show is that maybe people could look at balanced funds with the markets being at these levels. You would suggest that contra funds probably provide an equal and opportunity as well?
Yeah, so in this market, both balance and hybrid funds, balance fund is a subcategory of hybrid funds, and contra funds make sense. If you are a long-term equity investor and if you want to go all the way for an equity fund, then within the entire equity fund universe, a contra fund makes a lot of sense.
Okay.
When you go for an hybrid fund, you are bringing down your equity allocation. So if you want to have a conservative bet, you go for hybrid funds. But if you want to be in equity, and you know that the market is expensive, then the best bet, the best theme would be a contra bet in these times.
Okay, so in which case, Nirav, tell me a couple of things. One is, if you are indeed recommending a contra fund, there are not too many options.
Yeah.
You just spoke to Tahir Badshah of Invesco. Their fund has done exceptionally well. Is that a fund that people can invest into? You don't have to say a yes. Or are there other options that are available?
No, definitely. Me and my clients are invested in that fund. So with that caveat, so I would differ a little bit. Although there are very few 2 or 3 funds out there in the market with the name contra in the name of the fund, I believe by definition all value funds are also contra funds in one sense of the definition. So by that, if you broaden the horizon a little bit of the definition of a contra fund, there are more options than only 2 or 3 funds out
Which
there.
are better than the contra funds, you would say?
So I mean, it's not right to compare. They are also contra funds by the nature.
So let me ask you, there are people who have finite pools of money, right?
Yeah.
So one, you've recommended the Invesco India Contra Fund and the SBI Magnum Contra Fund. My question to you would be, if somebody wants to invest in a contrarian theme, not necessarily the name contra, but a contrarian theme, are the Invesco India Contra Fund and SBI Magnum Contra Fund good options or are the only options, or would you believe that there are other options which could provide better investing opportunity? Let's say I have 10,000 bucks and I want to invest in one fund.
Okay, so then there is a contra fund which defines itself as a contra fund, right? You don't have to look anywhere else. So Invesco India Contra Fund has been named, defined, and it is mentioned in the investment objective of the scheme. That is it is an out and out contra fund. Plus it has been as your slide out there shows, it has been an outperformer. And a contra fund by definition is not supposed to perform a growth fund right now, which is the flavor of the season. Yet this particular fund has done that. So there's no harm in recommending that particular fund to my clients and to yourself. If you want to further take equity bets, and if you can't restrict yourself to a single fund, then you look at other value funds also.
Okay. Would you be able to share names here?
So Birla Sun Life Pure Value Fund. There is this particular fund which is PPFAS, Parak Parik Long Term Value Fund. Now this fund at its core, the strategy is a contra bet. It does not like to own stocks that are in favor and that are extremely overvalued. It likes to bet on stocks, on sectors which are out of favor in the market, which falls in the definition of a contra fund. So one can, and that is not fully invested in Indian equity. It has 25-30% exposure to international equity because it thinks Indian equities are a bit overvalued.
Sure.
So that also is a contra theme, although they don't name the fund as a contra fund.
Okay. Nirav, any final thoughts on this theme or otherwise how people should be approaching investing in funds currently at these moments?
So contra fund, the definition of a contra strategy is that you bet on out of favor. So you bet against the trend, you go against the herd mentality.
Is it possible to invest in funds like that, Nirav? Are there funds which are out of favor right now which can come back?
So infrastructure fund last to last year.
You're talking about thematic fund.
So a theme which is out of favor. So contra means you bet on an asset class which is out of favor. So you put your money in equity or real estate when they are out of favor, or you bet on a sector which is out of favor, or you bet on a stock within a sector which is out of favor. But mind you, one has to be very careful. Just because something is out of favor doesn't mean it is. So definition of a contra fund is you bet on a underdog or you bet on a unsung hero. Now both the words are important. Unsung, it is out of favor. It has to be a hero. There has to be a future potential in that particular sector or stock. If there's no merit in it, then you should not be betting on it. So I'll just add, there was this hockey player, very famous ice hockey player, or a hockey coach who said, don't go where the puck is, go where the puck is going to be. Right? So similarly, a contra says, look, this sector is P-derated or the P-re-rating has not happened. This stock is out of favor right now because of some temporary issues. But if I look at it from the next 2 to 3 years perspective, I see a lot of value there. You have to have a merit in that particular thing. And Warren Buffett, if I may add, is one of the best, since he's the biggest and he defines what value investing is. He also happens to be one of the best contra players out there, contra investors.
In all the investments that he did in 2008.
Yeah, 2008 when he bet on GE and Goldman Sachs, and mind you, he didn't bet on it on these two companies for the last 5 years when they were in favor. He bet on them when they were available 90% down from their peak valuation.
I must add, though, viewers out here, that if you are indeed adopting this approach of taking a thematic fund or a thematic stock for that matter, you believe that the stock could do well or the theme could do well over a period of 5 years while being out of favor, you need to know the sector or the asset class inside out. If you do not know, I think that options open. If you want to make the best returns and you know the sector inside out and you believe the sector is turning around, go and bet on the stocks in that space. If you know that the sector is turning around or you don't know how to invest in companies, I think thematic funds or contra funds might be a great idea. For all of you who otherwise believe that you don't know either of these but want you to make the best returns, I think mutual funds is the best category, and which is why we're doing this show. Nirav, Panchmatia,
pleasure.
Thank you so much for taking the time out today and joining us on the Mutual Fund Show. And viewers, thanks for tuning in as well. I know we've not been able to answer a lot of your questions, but we'll request both our guests, Tahir Badshahs, Invesco, and Nirav Panchmatia, to take time out over the course of the next 2 or 3 days and give in the replies to your questions. If you do have any of the questions or comments, please leave them on our Facebook page and we'll try and get them answered. Thanks so much for tuning in to the Mutual Fund Show. We'll see you next Wednesday, same time.